Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Jason Hall and Tyler Crowe giving a 1 to 10 rating to the company that sponsors the most entertaining PGA golf tournament of each year. It's Waste Management, ticker symbol WM. Talk about the business first, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Tyler's at a 9. Jason, you're at an 8.
Yeah, my only ding from Tyler's score is that this is a really capital intensive business, and the company's taken on a significant and growing debt load, and that growing debt load continues to grow faster than cash flow per share over the past decade. I'm nitpicking a little bit here, but all of the acquisitions, all of the expansions, not necessarily deriving a tremendous amount of per share value directly from those things.
Well, it might be the same because I actually added a point for the Waste Management Open that Anna was referring to. But so 9 for it being a near perfect business. It's durable. It's protected by regulations and the NIMBY effect. It has basically near monopolistic position in certain geographies. 1 point off for cyclicality of the commercial business, which is, especially in like construction, which can wax and wane total like tippage in a landfill, and for its recycling business, which is subject to commodity prices. But outside in that, like, how do you screw up a landfill?
I was going to say, the three of us have been trying not to make the trash and garbage jokes. We didn't specifically say they do garbage, right? Trash, recycling, landfill.
It's in the name, Anand.
Right. Well, it's kinder, right? If it was trash management, I think everyone would get it. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Tyler, you're at an 8. Jason, you're less charitable at a 6.
Yeah, so here's what I'm looking at. Management earned 167% payout on the total shareholder return component of executive compensation for its most recent 3-year period. Here's the thing. Total returns averaged less than 9% a year, vastly underperformed the market. And to earn that high of a payout, I mean, that sounds like a participation trophy to me. They earned 135% payout on the cash flow generation component. Free cash flow per share actually fell over those 3 years. Management's getting rewarded like they won the Super Bowl. All they're doing is keeping the trash truck out of the ditch.
Man, it feels like Freaky Friday. That feels like one of my rants. I actually gave it an 8. And again, maybe I'm showing my stripes here because I'm a little partial to the business. But I think James Fish, he's been with the company for more than 2 decades and he's close to 10 years in the CEO chair. I think during his tenure, the company's done splendidly. I could maybe we don't have enough time for me to really pick apart the cash flow thing that Jason's talking about. Maybe we can do a longer deep dive on another scoreboard some other time. But other than that, not really a lot of notes.
Yeah, I think Jason was a dumbest friend from college reference away from being Tyler on that answer. For financials, a 10 is a fortress, a 1 is yikes. Both of you have 7s, Jason.
Yeah, Tyler and I agree here because the underlying business supports the balance sheet, even with that debt being kind of high. But I don't think it's as good as a business like this should be. The lower score for management, I think, is a big reason why. They have bought a lot of stuff, and there's been a lot of empire building here that hasn't necessarily resulted in maybe a ton of extra value per share in the way that you would think that it would have for a business of this caliber.
Yeah, the higher levels of debt look frightening at first glance, but revenue and cash flows are consistent enough that it's covering interest payments and it shouldn't be an issue. I think the free cash flow qualm does come from a significant outflow right now to kind of fix its recycling business, which they believe will kind of materialize in terms of higher cash flow in like 2027, 2028. And so it's kind of a lull in the free cash flow part. And I think if we were to pick it apart right now, it looks weak on those numbers specifically because of that.
Tyler, let's talk valuation. How well will Waste Management stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I actually only gave it a 5 to 10 score with a safety score of 8. So not great returns, but pretty reasonable expectation to get them. As much as I appreciate the business, there's no getting around the fact that a large portion of the company's stock performance over the past 5 to 10 years has actually come from multiple expansion of the stock itself. I love a stable, high return business as the next person, but paying 35 times earnings for a business that's growing, earnings per share about 10 to 12% annually and a 1.4% dividend yield is a pretty high price to pay. I don't think investors are going to lose money on this by any means, but I think its current valuation bakes in a decent chance at underperformance of the S&P 500.
Yeah, I think that's right. My safety score of a 7 is probably more tied to valuation and also the things that they're working on. Recycling has been kind of a bugaboo for the company for a while now, right? And I think there's expectation that they're going to work through that. And I don't know if that expectation is going to match up with reality.
Thank you both, Jason, and to Tyler. They've given Waste Management a pretty strong overall score of 7.0 out of 10 with mediocre returns expectations. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Quanta Services. Till then, Fool on.